Graceman Knowledge All, GMK. Welcome to my YouTube channel, where you are taught all you need to know about accounting, finance, and lots more. Remember to like, share, and subscribe.
In this episode, we will be rounding off with IAS system, property plant and equipment, and rounding off with the recognition criteria. Recall that in the first episode, we talked about the recognition criteria. I'm doing this recap so that we can understand the basis for the recognition criteria. We said that on what basis should an item be recognized as assets? We said that it is probable that future economic benefit associated to such assets will flow into the entity. The second recognition criteria we said that when an asset can be reliably measured. Having said that, we go to the recognition criteria. On what basis should an asset be recognized in the books of an entity? One, on disposal. What does this mean? On disposal, this simply means that at the point that the asset is to be sold out, and note that an asset can be disposed either before the end of the estimated useful life or at the end of the estimated useful life. In the course of this section, we would buttress this with scenarios. Also, it's the second recognition criteria is no future economic benefit associated to the asset will flow into the entity. Remember that under recognition criteria, we said that probable future benefit will flow. So that means we know that future benefit will flow into the what? Into the entity. But we are not saying that for the recognition, no future economic benefit will flow, no future economic benefit associated to this asset will flow into the entity. So this means that the moment we have been able to ascertain that no future economic benefit will flow into the entity, no future economic benefit associated to this asset will flow into the entity, that means the asset should be derecognized. Now we go to disposal. What is the basis for disposal? We have said that, and we are saying that there is neither gain nor loss on disposal, meaning that when an asset is disposed, there is an entity that makes what we call gain or loss. What is gain or loss? There is neither gain or loss on disposal of an asset, and this is the difference between the carrying amount of the asset and the sales proceed. What is the carrying amount talking about? The carrying amount is the historical cost of the asset less the accumulated depreciation. Recall that under the model we talked about cost model and the revaluation model. So using the cost model here, we are saying that the formula for carrying amount is the historical cost less the accumulated depreciation and the sales proceed, meaning that at that point of disposal, the proceeds from the disposal of such assets minus the carrying amount of the assets will either lead towards gain on disposal or loss on disposal. Now, what is loss on disposal? Loss on disposal simply means that the carrying amount of the asset is greater than the sales value. Say for example, an asset is sold in year X1. The carrying amount of that asset in year X1 is 200 naira, while the sales proceed is 100 naira. We can see here that the carrying amount of that asset, which simply means the net book value of the asset, is greater than the sales value. And this simply means that that there is loss on disposal, because what came into the entity is less than the value of the concerned asset on disposal. Now we go to gain on disposal. Gain on disposal is the opposite of loss on disposal. For gain on disposal, we are saying that the carrying amount of the asset is less than the sales proceed. So we can reverse the example we have here. We can now say here that the carrying amount is 100 naira, while the sales proceed is 200 naira. We can see here that the carrying amount is less than the sales proceed, and when the carrying amount is less than the sales proceed, it is gain on disposal. Note, asset can be disposed before the end of its useful life. We will give practical example to buttress that. We have this example. Grace Holdings bought a machinery on the 1st of January 2001 for 50 million naira. 1st of January 2001 for 50 million naira. Estimated useful life of 5 years. Of 5 years. The machinery was sold on the 31st of December 2003 for 30 million naira. What is the gain or loss on disposal? Showing the accounting entry. Estimated life of 5 years. This would mean that the annual depreciation will be 50 million divided by 5. That means the annual depreciation will be 10 million naira. We are now saying, and recall that I mentioned earlier, that carrying amount is historical cost of the asset minus the accumulated depreciation. The asset was sold on the 31st of December 2003. Disposal date 31st of December 2003. Doing our calculation, the asset was machinery was bought on the 1st of January 2001, 2001, 2002, 2003. This would mean that this asset was sold in the third year. And looking at our calculation of the annual depreciation, our annual depreciation is 10 million naira, and this asset was sold in the third year. That would mean that the accumulated depreciation at the end of the third year will be 10 million naira multiplied by 3. That will mean that the accumulated depreciation at the end of the 3 years is what? Is 30 million naira. So accumulated depreciation in the third year is 30 million naira. We are trying to calculate our carrying amount on the day of, as at the date of disposal. So for us to know our carrying amount, we said that our carrying amount is historical cost minus accumulated depreciation. Our carrying amount, our historical cost is 50 million naira. Our carrying amount is 30 million naira. That would mean that our accumulated depreciation is 30 million. That means that our carrying amount as at that day of disposal is 20 million naira. So we now go ahead to find the difference between the carrying amount and the sales proceed. Sales proceed is 30 million naira. Sales proceed is 30 million naira. While the carrying amount is 20 million naira. Looking at this, we can see that our carrying amount is less than our sales proceed. Because our carrying amount is less than the sales proceed, it is gain on disposal. It is gain on disposal. Why? Because our carrying amount is less than our sales proceed, and also our sales proceed is better than the carrying amount. Going to the accounting and showing this transaction in the books of Grace Holding, effecting this transaction in the disposal in the books of Grace Holding, we need to set these parameters right. Our carrying amount is 20 million naira. Our historical cost is 50 million naira. The sales proceed is 30 million naira. While the gain on disposal will be sales proceed, which is 30 million naira, minus carrying amount, which is 20 million naira, and the gain on disposal gives us 10 million naira. What will be the accounting entry? What would recognize the machinery in the books of Graceman, Grace Holding? We have our description. want to derecognize the asset in the books of Graceman. First thing we need to do is to credit the general ledger of the asset. Why? Because the asset is disposed. Machinery 50 million. Having credited machinery account with 50 million naira, that will mean that recall that at recognition machinery account was debited with the 50 million naira. So by credit machinery account 50 million naira, that means the 50 million has nilled off each other. What is next accounting entry? The next accounting entry is to debit the accumulated depreciation with the accumulated depreciation as at the date of disposal. Note that the accounting entry for depreciation year on year, month on month, year on year is to debit depreciation account and credit accumulated depreciation. Why are we doing that? Because the asset is still in use and also because economic benefits associated to the asset is still flowing into the entity. But now that we want to derecognize the asset, what do we do? All the accumulated depreciation as at the date of disposal will be debited back to what? To accumulated depreciation account. That will nil off all the credit balance of that concerned asset in the accumulated depreciation account. What's the accumulated depreciation as at the date of disposal? The accumulated depreciation as at the date of disposal is 30 million naira. Now, what is the next accounting entry? Is the sales proceed. The sales proceed came in through the bank, 30 million naira. Having this, what is the next thing to recognize? The next thing to recognize is the gain on disposal. Gain on disposal, which is 10 million naira. Let's assume the machinery was sold for 10 million naira. Sales proceed of 10 million naira. This would mean that the sales proceed of 10 million naira will lead to loss on disposal, and loss on disposal would mean that N on disposal, sales proceed minus the carrying amount as at the day of disposal is 20 million naira, which will give us loss on disposal of 10 million naira. Putting this in the books of account, the same thing, we need to recognize the machinery by crediting machinery account. Why again? Because at recognition machinery account was debited with 50 million naira. Having done this, we also need to debit the accumulated depreciation account because we are recognizing the asset, and because we are recognizing it, we need to nil off the credit balance in accumulated depreciation that is associated to the asset on the day of disposal. The accumulated depreciation is 30 million naira. What is the sales proceed? The sales proceed is 10 million naira. Sales proceed 10 million naira. Because it is loss on disposal, gain will be credited while loss on disposal will be debited. Because it is loss on disposal, what do? We will debit loss on disposal to our statement of profit or loss and other comprehensive income, and that gives us 50 million. Note that these two scenarios are applicable to disposal before the end of the estimated useful life of an asset, and we have the scenario of gain on disposal, and we also have the scenario of loss on disposal. Having given detailed exposition on disposal before the estimated useful life, we will round up this episode with disposal after the estimated useful life. What does disposal after the estimated useful life mean? It simply means that an asset is disposed after the estimated useful life. And what will change here? What will simply change here is that the carrying amount will be zero. And why will the carrying amount be zero? The carrying amount will be zero because the asset has been fully depreciated, having exceeded the estimated useful life. And that would also translate to making profit whatsoever, however small, on whatever amount the asset is sold. Look at our example under disposal before the estimated useful life. It could lead to either gain or loss depending on the sales, depending on the sales proceed. It will be gain when the sales proceed is more than the carrying amount, while it will be loss when the carrying amount is greater than the sales proceed or sales proceed is less than the carrying amount. But in this case, at the end of the estimated, that would mean that at the end of the useful life, the carrying amount of the asset will be zero because the asset has been fully depreciated. Let's go into this example. Bank of Nigeria Limited bought a Lexus Jeep for 18 million on the 1st of March 2016. Historical cost 18 million. When? 1st of March 2016. It was sold on the 17th of October. On the 17th of October for 1 million naira. 17th of October 2026. This already tells us that it was used for 10 years. Estimated useful life is 4 years. Estimated life is what? 4 years. That means this asset was still in use 6 years, for 6 years after the estimated useful life. That would mean that the carrying amount of this asset in the 6th year or in the 10th year is what? Is zero because it has been fully depreciated. We can test this also. Let's go ahead to test. Historical cost, we have established that. So, what's our annual depreciation? Our annual depreciation will be 4.5 million naira. So accumulated depreciation in the 4th year will be 4.5 million naira. That is 4, which is what? 18 million naira. Carrying amount will be historical cost minus accumulated depreciation. What's our historical cost? 18 million. What's our accumulated? Our historical cost 18 million. Accumulated depreciation is also what? 18 million. That means the carrying amount after the 4th year is what? Is zero. And we are saying that this same asset was sold for 1 million naira in the 10th year. Sales proceeds is 1 million naira. Carrying amount is zero. What does that mean? We don't even need to tell us that it is what? Gain on disposal. And what's our gain on disposal? 1 million minus 0, which gives us 1 million naira. What is now the accounting entry? Our accounting entry, we have a description. I get it. The Lexus Jeep was bought for 80 million naira. Again, we said that when this Lexus Jeep was bought, the Lexus Jeep account, the motor vehicle account was debited. But now that we are recognizing it, we need to credit it. Motor vehicle, Lexus Jeep, 80 million. is the accumulated depreciation at the date of disposal? Accumulated depreciation was also 80 million on the date of what? Disposal. Because it was disposed after the estimated useful life. Now, what is the sales proceed? The sales proceeds, which hits the bank account, is 1 million naira. What is the gain on disposal? Gain on disposal is also 1 million naira. And that balances. Thank you so much for watching. Do not forget to like,